How is the stock market doing? Well, we've had a bounce back. And this is, by the way, part 2 in a series. So I'll put the link to part 1 down below. What I'm going to share with you today, though, is not only a follow-up of part 1, but I'm going to share with you how to choose the best stocks or Forex, commodities, crypto, whatever, at any given time. So even though I'm showing you this, or I'm recording this at least in real time, I'm going to give you a technique that I use all the time, every week, month, year. So this is an evergreen video, if you will, to show you how to get into the best moving financial markets, the ones that'll make you the most money, honey. And that's what we want. So what we have right now is we have the S&P 500, as you can see here. Now, I will say this before I go on. I'm actually hoping my dream come true would be that we actually come back down and retest this low, the 200 SMA. In fact, I would love it if we actually went a little bit below that 200 SMA and then went up. That would be sweet. That's what I would love to see. But I never know what the market's going to do. I know. It's strange. Barry, don't you know everything? Nope. Can't predict the future. Been working on it. Crystal ball broke a long time ago. So anyway, what I'm trading is probability scenarios. So I entered with some out-of-the-money calls. By the way, congratulations. One of the viewers said they did the same thing, and they've already made 30% of their money, which is great. However, this is the time to tell you all y'all that, by the way, I speak Southern because I'm from South Detroit. So all y'all, in all seriousness, please do not trade based off just what I say. All right, I'm giving you some information of what I do, but this is not financial advice. Muy importante that you understand that. I'm not giving any specific recommendations here. So do not ever trade based off just what I say. And part of that is because trading is not just about being right or wrong. It's also knowing how to manage a position, when to put on risk, when to take off risk, when to take some profits, etc. So it's much more complicated than just being right or wrong. All right. So having said that, let's move to the lesson for today. So first of all, it's the tool. I'm using a percent change chart. Notice here on the right axis, there's no numbers here. These are not prices. These are percentages. And here is 0%. And as you can see there, it can go down below 0. And that's because it goes back into time. Wherever you start the chart, whatever time date you start to the chart is 0. The markets haven't changed at all. So whatever market you plot up here, and you can see the ones I've got. So I plotted the 4 major equity markets, the S&P 500, IWM, Russell 2000, the Dow, and the Qs, NASDAQ 100. And so these are 4 that I'm always looking at to see, okay, where's the best advantage? Which one of these do I want to be in right now? You could just trade the S&P 500, and that's okay. That's not bad. But the goal of a money manager, fund manager, hedge funds, really they're gauged on do they under or outperform the S&P 500. And this is one way that I work at doing that. Since this time back in January, what has happened is that these, even though these are all equity markets, they have performed very, 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 very differently. So if you wanted to, if you traded the Russell 2000 there, and there's your color coding, then you are down. You have lost money. You have lost over 7% since that time. If you traded the NASDAQ 100, you're up almost 30%. Wow, huge difference just since January. So that's why this is so important. This can make all the difference in your trading. Now, talk about outperforming the benchmark. So here's our S&P. S&P is up about 8%, but I mean, my goodness, the Qs have outperformed it dramatically. This is, again, a technique you can use not just with these 4 equity markets. I use this when I'm looking at different sectors in the markets. Which sector do I want to be in? So we can break this down even more granular. I get this question a lot, Barry, which Forex pair should I trade? Which is the best one? Well, there is no one best one all the time. They're constantly in flux, and one starts outperforming another. This is the way that I choose which Forex pair I'm going to trade. So it really applies to everything in the market and can dramatically increase your profits. I mean, it can even make, as you see here, the difference between losing money if you bought the small caps or making really good money, almost 30%, since January. Now, just to show you how you have to stay on top of this because the markets are a moving target. I've gone back here to 2020. And so we had a move up and a move down. And then, as you can see, exact opposite happened. So here we have the IWM. So the small caps at this time went up 48%, whereas, and here's the Qs, they only went up 12%. I'm rounding here. So you'd make 4 times more money if you invested in the small caps instead of the Qs this time. So it's not the same every time. This is why you got to stay on top of it. Markets evolve, they change, you have sector rotation and so forth. Now, the next question is, okay, how to. First step really out of this, when they all are kind of at the same place here, is I look for which one starts outperforming. So the first one that started outperforming again was the IWM, the gold one. And then I look at the retrace and I see, okay, which one retraced the least? So if you look at this, first of all, we had the move up that was the best on the IWM, the worst on the Qs. In fact, we had a really bad retrace here. Even out of zero, the retrace on the Qs was the worst. So it's already showing, that's really step one, showing the more bearish action right out of the gate. Then the one with the most bullish action is the IWM, and then the retrace is not as bad, and then off to the races she goes. So it's really this first period of time where we're looking for, and I call these relative strength charts, but most platforms will call them percent change charts. They do have different names for different trading platforms. All I can tell you is contact your trading platform and tell them, because there's different names, hey, what I want is where I can plot multiple markets on one chart and see the percentage change between those markets. And they can direct you to whatever they call that tool. So now I'm going to give you the sweet stuff, okay? The sweet sauce that outperforms. You look at this chart, and it appears, and it is actually true, that this market here, which is astonishingly the Dow, rarely do I ever expect the Dow to let's see, there it is right there. You can see the colors. Remember, the color coding is right there. Rarely do I ever expect the Dow to outperform the other markets. In fact, there was a time in my life I just gave up on it. And I just thought, nah, Dow never outperforms the NASDAQ or the S&P. But then I realized, you know what? We've got sector rotation, all this stuff. I'm not going to have any preconceptions going in. So it is true that the Dow outperformed. But remember, we're anchoring these relative strength charts to a day. And so if you just bought and held from that day to that day, yes, the Dow outperformed. But now here's the secret sauce. Watch this and be amazed. So being a contrarian and always knowing that things constantly change, what I do is I'll draw trend lines on these puppies. So I'm seeing that, yeah, okay, right now from this time to this time, the Dow is outperforming. And what's the worst sector? Well, the IWM again. So again, I'm looking for sector rotation. So I draw a trend line from there and I say, wow, this one is really underperforming. And I love these opportunities. And I will look to buy the worst performer when it breaks out. That is a very early indication that sector rotation is about to occur. And professionals, we always get in early. Amateurs get in late. Amateurs wait for everything to be obvious. And even with technical analysis, by the way, you might have heard the old slogan, buy the rumor, sell the news. And that's very true, but it doesn't just apply to news as in the newspaper. It applies, newspaper? Do they make newspapers anymore? I don't know. What's paper? But anyway, it applies to technical analysis as well. So by the time everybody who knows technical analysis knows all the basic stuff, and they see it, it's too late. So we want to go against what most people using technical analysis are trading. And very few people use this kind of chart anyway, but I want to look for the surprise. And now watch this. This is what's so cool. So you see right here, yes, we buy this breakout. Now what we have to do is we have to go back in time, because remember, now we're entering here. In other words, at this time. So we're not entering at this time anymore. So that means we have to change our relative strength chart. So we got to move it over to this time. So now that we've changed the reference points, because now we're buying here, right? This is the beginning of our percent change chart, and we bought this dip. So now you see how it changed all of the lines here, and kablambo, this puppy goes flying up, and we're making about 10% in just, a month, a little more than a month? And maybe a month and a half or so, whereas the other markets all hung around 4% or so. So that's a technique that I apply to these charts. You can't just look at them historically and make money with them. You have to really trade them at the hard rate, or the hard. That's what's interesting about this. You're not trading the hard right edge of the screen on this. You're trading the left edge of the screen. That's kind of, I just thought of this. First time I've ever said that. You're not trading the hard right edge of the screen. You're trading the hard left edge of the screen. And we're looking for underperformance, drawing a trend line. There's two ways to do it. You can draw a trend line like I did, or another way is you can look for previous highs to break out. And both work pretty well. But you're looking for the first one that breaks out, the one that starts, again, outperforming. So if you look here, for example, we've got a high here. And I'll just say the blue line. Okay. But the next high on the blue line is a lower high. On the black line, it's a lower high. On this kind of green line, it's lower. The only one that broke out above this was the gold line, which happens to be the IWM. And so that's another technique. So two techniques: trend lines down, looking for it to break through to the upside, and breaking through higher highs before the other markets. Relative strength. So again, whether you apply it to forex pairs, cryptos, stocks, major indexes, commodities, whatever it might be, sectors or industries, this works great for sectors and industries as well, especially. That's really a great special way to use this. So the next thing, now I got to say this and finish with this. I don't just trade these charts. This is where I'm looking for the opportunities. Then after I see, okay, this market, this index, this sector, this industry is performing better than the others, then I got to go look at the actual chart of that market, and I look for a setup on that chart, that regular candlestick chart. And the primary tool I use there is, of course, support, resistance, and so forth, but my timing indicator. So I give away my market timing indicator to everybody, all my viewers. So go get it at indicatorwebinar.com, or I will show you how to trade it. It's actually already mysteriously hidden in your charts, but I'll show you where to find it, how to modify it, because we got to modify it a little bit, and then the patterns to trade on it. So there are indicator patterns that we trade on it. So it's not very obvious how to trade it. I'll show you exactly how to do it in about 40 minutes on a recorded video. You can watch it whenever it's convenient for you. Go get it, indicatorwebinar.com, my gift to you.